What is going on, investors? Hopefully you guys had a great week out there. And I tell you what, if you didn't, put all that behind you because, guys, it is Friday. It is time for the FAANG Stock Recap Show. The weekend is here. And on the FAANG Stock Recap Show, every Friday, we recap all the news of the week for all the major FAANG stocks, plus Microsoft and Tesla. And we go over the technicals as well. I'm not going to waste any more of your time because we've got a big news week this week, especially for Apple and Amazon in particular. But we're going to kick things off like we always do with Facebook. Last week, this stock was about $375 per share. Now we're sitting at about $381 per share. The trend just keeps going up and up for Facebook. We'll talk about that from a technical perspective here in a minute. Mega cap companies are undervalued versus the rest of the S&P 500. This is obviously an opinion, but it is one that shares here. If you follow this channel, I share this same opinion. I believe that companies like Facebook, Apple, Amazon, Microsoft, Google, you could probably maybe toss Tesla in there as well, but particularly the tech portion of FAANG that I just went over, I think these companies are undervalued because when you factor in their growth rates are as good and oftentimes higher than companies in the S&P 500 and kind of these high-flying other stocks out there that get a lot of attention but don't grow nearly as fast as the FAANG stocks and are not, probably more importantly, not nearly as profitable. And so this is why I suggest week after week here on the FAANG Stock Recap Show that you build your portfolio, the vast majority of your individual stock portfolio, around big mega cap tech, because you're getting value there, you're getting profits, and you're getting growth. You're pretty much getting everything you could possibly want when it comes to investing. Facebook and Ray-Ban, popular sunglass maker and glass maker, Ray-Ban, which make iconic sunglasses that many people wear even to this day, they unveiled a smart Wayfair glasses. So this has been tried by Google and probably even more similar to a Snapchat product that they offered in years past, where there's camera lenses on your glasses and you can kind of see things on the glasses. You can also take pictures and probably post Instagram and things like that. I think this is going to be a niche product, but what I thought was interesting was that Facebook actually partnered with somebody that is already in the sunglass business instead of trying to make Facebook branded sunglasses, which I don't think a lot of people would want to be seen wearing. Well, a lot of people want to be seen wearing Ray-Ban, so I thought this was a good approach, and we'll see if this is kind of a linear thing. Maybe they can partner with Versace, or they can partner with Maui Gyms or whatever. You know, there's other sunglass makers out there, and maybe Facebook can roll this into other partners. We'll see what happens there. Facebook is building custom chips. So we could just replay this story, whether it goes to Amazon, whether it goes to Apple, which had been doing this for at least a year now. Google as well is starting down this road. All these companies are starting to build their own, and they're not building them necessarily. They're kind of designing the chips, and then they're sending that out to a third party. And I suggested on last week's show that I think that's going to be a green space for one or multiple of these mega cap companies, that they will get into the fab business. Will they build one up from scratch? Will they build one here in the United States and build it up from scratch? I don't think so. I don't think they'll go that route, but I think they're going to get closer and closer to that supply chain, because as we've seen, there's a lot of delays in chips. And when you start designing them yourselves, these companies have the money, they have the ability to borrow money, they have the ability to invest in other companies that can make these chips. And I think eventually we'll start seeing news stories pop up that is what they are interested in. But right now, Facebook, Apple, Amazon, all these companies are building their own chips. Facebook is looking for machine learning and video quality chips, and they're going to develop those in-house and have somebody make those for them. Apple, massive, just a big old news week for Apple, especially today. It started the week higher at $153, ended the week closer to about $149 per share. share. The stock slid off big time today, in part, or really due to the fact that there is now a permanent injunction as a judge sided with Epic Games in one segment, and probably the most important segment of the Epic Games lawsuit. The vast majority of that lawsuit actually went Apple's way, but the key piece of it, the fact that Apple charges a 30% tax, every dollar that flows through Apple's App Store, 30 cents flows directly to Apple. And as you can imagine, that is a mega high margin business. Well, now Epic Games, pending appeal, pending all these types of things. And I tell you what, California judges, they issue a lot of rulings. And when they go to other courts, sometimes you see different opinions. I'm not a judge. I'm not a lawyer. I sure as heck don't want to pretend to be one. But my guess is this one is still going to work its way through the court system at some point. But this judge ruled that Apple must let developers access payment processing, access customer data, all those types of things inside the app. So if you're playing Fortnite and you want to buy something in the game, you should be able to check out through Fortnite servers and not necessarily through Apple's and be subject to that 30% tax. My broad view of this, I actually think this is a favorable ruling for the industry, maybe not necessarily for Apple in particular. We saw the stock get hit today, but the analysts started to come out, and Loop Ventures says that only a fractional headwind from the Epic Games injunction. And I tell you what, there's a quoting here that I agree with. And this is coming from somebody from Loop Ventures, says, I ultimately bet on humans being lazy. And if the price is the same, they will likely just continue to transact on the platform. And so I tend to agree with that. For one thing, the vast majority of purchases probably on the App Store tend to be $1 here, $2 here, $5 here, those types of transactions. And if it's easier just to click a button seamlessly with something like Apple Pay, well, then consumers will likely just continue to do that. More hardcore consumers might be offered a discount from a Netflix, like an Epic Games, from an app publisher that says, hey, instead of me paying a 30% tax to Apple, I'll pass some of that savings down to you if you click on this link and pay here. Those types of things. All in all, I think this will be a good for the industry at large. Apple will likely take a small hit, maybe in the shorter term. You'll see, and by shorter term, I mean over the next 12 months. But I think once you start looking out to 18, 24 months, those types of things, I think Apple is going to make up for these fees that are lost. Look, they could charge developers way more money just to have the privilege of your app sitting on the platform. So there's other ways that Apple can pull a tax in rather than just doing a transactional 30% tax. We'll see if Apple develops any of those types of things. Apple to sharply ramp up content output towards new item per week. I saw this headline and I was like, what are they referring to? They're referring to the Apple TV. And so not this box that they have here on the screen. There you can stream Hulu and Netflix and Fubo and whatever, ESPN and whatever else you want. But Apple's own like Netflix streaming service where they have popular shows out there, including like Ted Lasso, and I think Jennifer Aniston has a show as well. Well, Apple has been doing about one release every other week. They're going to boost that to one release per week. So movies, shows, and that type of thing. The other thing that I saw in here, they're going to invest $500 million marketing the service. So you've already seen the TV ads. I was watching football. I've seen TV ads. You probably see online ads. If you don't have an ad blocker or something like that, you probably see online ads for that service as well. We'll see if Apple is able to build that up into a very profitable unit of their business. Apple Watch Series 7, we talked about this last week. So the launch was looking like it was going to be delayed. I think they've got a bigger display coming on the Apple Watch. And they've got some other little components in there that are a little bit different. And it looked like they were going to be able to announce the watch, but there was going to be some delays. But it looks like now things are back on track. How great is it to be a $2 trillion company and have some delays one week and the very next week, those are cleared up? That is because you have the power of Apple. If this was a smaller wearable maker, maybe like a Fitbit or something like that, I guarantee you, They wouldn't be able to solve these issues in a week like Apple is able to. And that's why these companies are so critical to your investment portfolio, is because they have the size, the power, the money to get out of problems even like just slightly less large companies happen to do. Now, Apple has reportedly named a new head to their self-driving car efforts. This is long rumored. Obviously, we've been talking about here on the channel for about a year now, is the fact that there's this rumored Apple car. Well, they had a project lead and he left the company to go to Ford. So I don't know what that has to say about the forthcoming potential Apple car when the head of that division works for Ford. So we'll see what happens. But apparently the head of its Apple Watch software development will now take control of the company's self-driving car. I'm still not convinced. There's a lot of rumors and a lot of stuff out there, and I do believe the rumors, but I'm still not convinced Apple will come out with a car that has the Apple logo on it and you can buy it maybe on the App Store or something. I'm still not convinced that they will go that route. We'll see if they prove me wrong or not. Isn't it interesting? We get through all this Apple news, and the fact that they've scheduled the iPhone 13 launch event for September 14th is actually probably the last and least important news item, whereas this is the number one way Apple makes money, is selling these devices. But when you had a lawsuit, you've got the self-driving car and those types of things, well, those things kind of take precedent. But we do have an Apple launch this coming in 4 days on September 14th. The iPhone 13 is expected to launch. I've seen a lot of the rumors. It doesn't look like that big of an upgrade. If you bought the iPhone, whatever this is, iPhone 12 last year, I don't necessarily think, I personally won't be upgrading. My wife probably needs a new phone, or somebody in your life might, and that is probably who will be upgrading, other than the hardcore users that upgrade every year. Now, moving on to Amazon, it is floating up, and you can tell I have like 4 or 5 shares of Amazon, and whenever it goes up, it just makes me a little more happy than normal. Started the week at I'll call that $450 per share, up to $3,470. Actually at a line of resistance. We'll talk about that when we get to a technical perspective. Lots of news for Amazon this week. They are offering, and they is referring to Amazon, free college tuition to lure workers with job openings at record highs. So it looks like if you work for Amazon for 90 days, they will pay for your tuition. And this will be paid up front. It's not a reimbursement. You don't have to pay your tuition and then go, ask Amazon to pay for it. No, they will pay for it. Okay. This is incredible. I tell you what. And so you have to work 90 days at Amazon, but this is like tuition, room, board. It's like a really comprehensive thing. I tell you what, if I was a younger person and I couldn't take out a loan, or I wanted to work during college, this seems like a great opportunity. Now, why is Amazon doing it? Number one, they probably pushed the pencil to the paper. They realize this will be negligible expense when it comes to a company that does $100 billion and a quarter and north of that in terms of revenue. This will be just a rounding error in terms of expenses that it ends up taking. Why is Amazon doing this? This is a big middle finger to Walmart, to Target, to mom and pop businesses, but Amazon's almost destroyed a lot of mom and pop businesses. They're not worried about them. They're worried about Target and Walmart in particular, knowing that those companies might not have the financial leeway with investors where they can, cut costs and those types of things. I think both those stocks pay a dividend as well. Amazon doesn't have to do that. They are going to lure workers away from that, because if you're a college student, why would you go work for Walmart when you could go work for Amazon and probably make a little bit higher wage and get your college paid for? I mean, it'd be an absolute no-brainer. I love what Amazon's doing. The other thing this will allow Amazon to do is internally recruit, because if Amazon is paying your college, well, you probably aren't going to quit your job, and you're going to be there for a couple years, and it could be that Amazon tries to retain the workers and the people that do a great job. They pay for their college, and then they just usher them right into a management job or some other higher portion of the company, and that is an incredibly cheap way to retain and hire high-quality talent. I think that's a great move by Amazon. Amazon, I love this news story. Amazon is likely to be the front runner for the NFL Sunday Ticket. So if you don't know, the NFL it obviously is every Sunday, and I think there was a game last night as well. If you want to watch your out-of-market team, so for example, I live out here in California. I'm actually a Cincinnati Bengals fan. I don't get to see a lot of Cincinnati Bengals games because they only show, at one time they showed the Raiders out here because they were in my market, but they show the 49ers. Those are the only two teams they typically play on a Sunday out here. If I want to watch the Bengals or the Dolphins or some out-of-market team, they either need to be on Monday Night Football or Thursday Night Football, or you needed to have Sunday Ticket. And the way the NFL likes to do things is they like to have exclusive contracts. They have exclusive contracts for the jerseys that the players wear. They have exclusive contracts for the headphones that the coaches wear, for the trading cards, for everything has an exclusive contract. And that is the case also with the Sunday Ticket. And for many, many years, I think for 27 years, it's saying it has been with DirecTV. DirecTV started as its own company. Then it went to AT&T. AT&T has recently kind of spun out a portion of AT&T. DirecTV is now a part of a private equity firm. So AT&T only owns a portion of DirecTV. And so it makes sense for private equity to kind of strip away some layers of that business, and Sunday Ticket contract ends after next football season. So not this football season, but at the end of next season and end of 2023, the contract for Sunday Ticket is reportedly coming up for grabs, and the NFL wants between $2 and $2.5 billion. Yeah, $2 and $2.5 billion per year, not for a 10-year contract, per year for this. And the NFL is going to make lots and lots of money on this. And obviously the likes of Disney are in play for this because they own ESPN and those types of things, but also Amazon. I would say the amount of companies that can pay between $2 billion and $2.5 billion per year is very, very small. I would expect this negotiation to head into the rest of the year. I don't think this is going to be finalized anytime soon. I could be wrong with that. If one of these companies come forth with a ton of money that the NFL can't say no to, but the NFL knows they've got to pin ESPN versus Amazon. And so you're going to see news stories where it's Disney's going to get Sunday Ticket, and then it's Amazon's in the front. These are very sophisticated owners of the NFL. They are very sophisticated and very wealthy because they know how to play the game. So they are going to pin these two companies against each other and try to drive up the bidding. Now, do not make the mistake many investors make when you see a company like Under Armour sign a deal or Nike sign a deal with these companies. These are sponsorships, okay? This is a sponsorship to drive Amazon Prime subscriptions, drive delivery of that type of business. And for Disney, it's getting more subscribers to Disney Plus or ESPN Plus. They are not going to make money at $2 billion to $2.5 billion per year. You're simply not going to make money on that. DirecTV had that same business model for 27 years as well. They paid a ton of money for Sunday Ticket to get you to subscribe to DirecTV, so they made money the other 6 to 8 months that the NFL is not playing. Don't be fooled. Don't think that if Amazon signs this deal, all of a sudden they're going to make a bunch of money off the NFL. No. That is not how NFL owners work. They are going to make a ton of money off of Amazon, not the other way around. I still think it would be a good deal for Amazon. Amazon launches its own branded line of smart televisions. This goes along with something like getting NFL rights, because now you could buy a TV that might have additional features to kind of support that. You have Alexa enabled, TikTok, those types of things. Amazon is really getting into kind of the linear TV portion of, and maybe not traditional linear TV where you plug it into a cord, but they have Prime Video. They have a Thursday night NFL game, which is an exclusive to them as well. They might eventually get into Sunday Ticket. Part of investing into the NFL is they want you to invest into the NFL Network and NFL Red Zone, which is also owned by the NFL. So if Amazon can get in bed, quote unquote, with the NFL, it'll give them a lot of opportunities to stream content and those types of things. And how do you make maybe a little bit more money? Well, sell somebody a TV where you get them inside your ecosystem. Just like Apple has a lot of people in their ecosystems on the phone, I think what Amazon wants to do is get you into the they see the opportunity is passed with phones. Okay. Google and Apple have pretty much cornered that market. I don't think that's going to change anytime soon. But I think what Amazon sees is that the TV is open game, open season, and maybe they can capture some people there. I think that's a great strategy in my opinion. California passed a bill targeting Amazon's treatments of warehouse workers. I won't get into this too much. I actually think this is, I don't support a lot of things that are passed out here in California. There's a lot of ridiculous things that they pass. I mean, we got fires blazing all over the place. They don't do a darn thing about that, but they pass a law like this, but I actually support this. I think this makes a lot of sense, and I think Amazon will have no problem complying with that new law. Amazon reportedly working on a POS, that's not it's a point of sale system to take on PayPal and Shopify. So both those companies have point of sales. And I actually was looking into Shopify's offering. They were on back order, so I wasn't able to get one. But occasionally I set up at live events. My brother has a business and we set up. And it would be nice to have a little point of sale system where I can take credit cards. You obviously can plug those into your phone or something, but I'd like to tie in to accounting software and those types of things. And it looks like Amazon is reportedly working on that. Now, it might tie in too with their checkout technology that they've been working on for many years now with these Amazon Go stores where you just basically check in on an app, you walk in, you grab what you want and you leave. It's basically a cashierless checkout technology, and they've launched that at 2 Whole Foods stores. So that's super exciting where you can just walk into a Whole Foods and walk out with a cart of groceries that's probably going to cost you like $600. I was at Whole Foods the other day and I bought a lot of stuff and it was like $200 and something, and I was like, holy crap, good thing I don't have a Whole Foods near me. I'd probably be broke. But so this is coming to Whole Foods. I think Amazon will roll out some more convenient software, stores and things like that. But I think at some point they license this maybe to like a 7-Eleven, maybe to other competitors as well. I think that's an interesting business model. Moving on to Netflix, start of the week at $5.87. This thing is broken out and it's broken out big. Okay. It's up to close to $600 per share. We'll certainly talk about that from a technical perspective. AMC Networks spikes on speculation of potential sale process. So AMC Networks, I think that's Breaking Bad and The Walking Dead is popular. There's many other series on there that people watch as well. Again, when a company like this comes up for sale, there's not that many people that can buy them. And then I don't know I don't think regulation is as strict on this, but certainly like a Disney could be viewed as, maybe anti-competitive if they acquire this. But Netflix is certainly rumored to do this. Maybe they don't have it listed here, but maybe potentially even Amazon as well. And so we'll see what happens with AMC, but it could be interesting that if Netflix decides this is our next way to acquire content is to actually buy the network. So we'll see if Netflix decides to do that. Now, we've talked about this here on the channel as well. Netflix scene is expanding its entertainment continuum with games. They've got to keep doing this, okay? They've got to expand and raise prices over at Netflix. And our next story has to do with that. Hulu, which is owned, I think, in part or mostly by Disney, they raised their subscriber rate. So you like to see this. You actually like to see the industry raise price, okay, over at Netflix, because it allows them to, one, maybe look like a good value at their current price, but it also will allow them to raise prices as well. Because as we talked about here many times on the channel, Netflix is tapped out from a user growth perspective here in North America and maybe parts of Europe as well. They're not growing that user number very much, and I don't think they're going to grow it unless they add a lot of products and a lot of services to their platform, which would require a lot of investment in those types of things. But the way it's just like the Costco business model. You just raise the price and existing customers that like your service will likely pay for it. Moving on to Google, oh my gosh, guys. Check my pulse. Am I still alive? Because Google actually went down this week. Started the week at 2,854. Ended the week down. This is like one of the first time in like 6 months this thing has been down in a week. End of the week at 2,817. We'll talk about if from a technical perspective, is this a reversal? Is this a break of trend? Talk about that here in a second when we talk about the technicals for Google. Its assistant is reportedly targeted by a new EU antitrust probe. This just happens all the time. So the Google Assistant is, I believe, the default voice assistant on Android devices, and it makes sense. Android is owned by Google, and so Europe has taken issue with that, and we'll see what they end up doing there. My guess is Google will have to pay a fine and make it maybe easier for voice assistants to become competitive on the platform. Moving on to Microsoft, also down this week, breaking trend. We won't say it's breaking trend until we get over from a technical perspective, but we did have a down week. Started the week at $300, ended the week at about $295, $296 per share. Microsoft indefinitely delays its U.S. return to the office. It says here in the headlines, amid COVID case surge, but I don't want to spread rumors here, but I saw many people kind of support this, is that Microsoft delayed this because the president of the United States essentially mandated, and we'll see if look, I'm not a lawyer. I don't know if he can do that or not. I don't know if anybody knows if he can do that, but essentially mandated that employees have to have some kind of protection. And Microsoft is kind of avoiding that because if you work from home, you don't necessarily have to be subject to those types of things. We'll see what happens there. Microsoft scoops up video editing software startup Clipchamp. We've also talked about this here a lot on the channel. Very hard from a regulatory perspective for any of these companies to use the plethora. I mean, we're talking about hundreds of billions, literally hundreds of billions of dollars sitting on these companies' balance sheets, and they can't deploy it. Okay, they've already done a lot of buybacks. They've done dividends, those types of things. Certainly they could raise those and do more of that, but they want some kind of financial cushion. They would like to expand their businesses and reinvest in them. And the way to do that is by doing very, very small deals like this Clipchamp, which boasted, I think, 17 million registered users, which seems pretty interesting on that front. Moving over to Tesla, started the week at $728 per share, and in the week higher. We'll talk about this from a technical perspective as well. We've been looking for this to break above, I think, about the 750 range. Haven't done that yet. I think we were there this week. Got rejected a little bit today, down 2.5%. Finished the week at $730, we'll call that $35 per share. Tesla sold over 44,000 China-made vehicles in August. That is up 34% month to month, and the local deliveries are up 49%. So out of these 44,000 units and change, a portion of them, or the vast majority actually, I think over 31,000 of them actually got exported, which apparently China likes. China likes that Tesla is making vehicles in China. And look, that's China's whole, I don't want to say it's their whole business model, but that's one of the things that when we think of China, they make things and export them. So obviously the country really likes that. And that is, indicative of their economy over in China. And Tesla is supporting that. Okay. They made 31,000 of these 44,000 actually got exported. In terms of local sales, it was at 12,800 cars and change, nearly 13,000 cars. That's up 49% month over month when they delivered 8,600 cars. Now, comparing that to other automakers in China, which I think is important, Li Auto, which gets a lot of attention and has a massive valuation, delivered 9,433 cars. XPeng did 7,200 cars. And NIO, which has a very just a gigantic valuation, only delivered 5,880 cars. So Tesla is beating them to a pulp. In fact, XPeng and NIO combined barely get to where Tesla is on their own. That shows me that is brand dominance in that market as well. Energy trading team at Tesla is in the work. Tesla obviously has that solar business that it's not a big part of their business. It may be one day. And maybe this energy trading, storing this on their batteries and those types of things could become a big business for Tesla. We'll see if that materializes at any time soon. That's the Google chart. We'll go over to Facebook, although the Facebook chart's starting to look like the Google chart. It just keeps going up and up and up. This thing is in an uptrend until it's not. We're looking for a break below. But considering how long Google ran, I would expect this to continue. Although we talked about how Google put up a red candle candle this week. It certainly hasn't broken trend, not to break any news when we get to Google's, but if Google happens to break trend, well, I would expect Facebook to kind of follow through with that. If these two stocks kind of trade in tandem, Facebook has a long way to go. Moving on to Apple is probably the most interesting from a technical perspective. So what we talked about last week actually came to fruition. We put up a big green candle over the $150 level, and boom, we rocketed all the way up here to $157. Just like we thought, this thing, if it got above 150, would move, and it did. It went from 150 to 157 really just in a couple days, but then the news of that epic lawsuit came, and we put up a big red candle. In fact, we retested this 150 level, and we're sitting right about 149. I am not concerned one bit, because when you look at the Facebook chart, it busted up over its highs and actually retested the highs that it previously made at 300. We were sitting here at 300, broke above, retest, broke way above up to 330, came all the way back down. I mean, went down like a solid 10%. So I would expect the same thing with Apple. A retest here at 149, not a big deal. Even a retest back here at 145, not something I'd be super concerned about. I'd see how the market is going to have the weekend to digest this Epic Games thing. More commentary from legal scholars and those types of things will likely come out. We might get chances on an appeal and those types of things moving forward. We'll see what happens with Apple, but I am not super concerned. We've pulled down to this 150 where you get, I don't want to say concern is not the word. The buying opportunity really materializes. You break 145. You break 145, odds are you're coming back to 137 and maybe even below 137. Anything below 137, and I'm loving life, and I'm probably buying more shares of Apple. Moving on to Amazon, we talked about, I love to just pat myself on the back if you haven't, seen that here on the channel. But we said when Amazon, couple weeks ago, in fact, I think on a show 2 weeks ago, when this thing was close to $3,200 per share, we said that is a buying opportunity. The title of the video, in fact, that week was Amazon is a buy, and I did that the following Monday. Actually went out and bought Amazon shares in my son's portfolio. Well, since then, I think somebody was listening because this stock went from 3,200 up to 34 and change, close to 3,500 and change. That is a natural resistance point. That is a natural spot for Amazon to kind of take a breather here. Now, what we're looking for is similar to Apple. We're looking for a break above this 3,500 level. We've been here before. The resistance overhead will likely come in at 3,770 on Amazon. So the minute Amazon, and in my opinion, if the news cycle stays the way it is and the markets just continue to melt up, I would fully expect Amazon to get up to this 3770, and that's where we would be on like Apple Watch, breakout watch alert, because then you'd be looking to get above 3770. You get above 3770, and I tell you what, $4,000 is in play with Amazon. Moving on to Netflix, a breakout alert. Oh, hello, breakout. Okay, so this stock for a year, over a year, in fact, at this point, a year and 2 months, this stock has been trading between $480 and $560 per share. That's only an $80 spread, and that's not a lot, okay? When you're talking about a $480, $500 stock, $80 is not a lot, honestly. And so it's been in a tight spread. It is traded above $560 for like 4 or 5 days over the last year and 2 months. And take a look when we broke above 560. Again, we talked about this on last week's show. We were looking for a breakout with Netflix above 560. If it got above 560, we were looking for it to run. And now it has hung out above 560 for longer than it has had over the last few years, because every one of these candles represents a day. I'm on a daily chart. Now, what we're looking for with Netflix is either to base out up here or just to continue to rally. When you look at a Google chart, you look at a Facebook chart, a Microsoft, when these things break out, they can run. Or you're looking for a pullback. You're looking for a pullback potentially all the way back down to 560-ish, maybe 570. A pullback to that range could potentially be a buying opportunity. Google, the train is still intact. The uptrend is intact. We did print a very large red candle. This red candle that we printed this week is actually as large or as larger as anything during this channel. So I will be monitoring to Google. If we can come down to the bottom end of this range, which if it happens next week will be at around 27.75 or so. Another 100, we'll call it another $40 to $100 off the stock price where it is today. If you could come down there, you'd be at the bottom end of this channel that is held intact for over a year now. And it could be creating a buying opportunity for Google if you think this trend is intact. But at some point, this trend has to break. And when a sign of it's breaking, so you might say, well, what's a sign of it's breaking? I think below 2,700 on this one. You get below 2,700, that would take out the previous lows here. All of a sudden now, at least in the shorter term, you've taken out lows many, many times. Not many times, but several times on this uptrend. You have taken out the lows. Okay, so I'd be looking for a break below 27 and really confirmation of that. Maybe a follow through down to 2,600. That's showing you probably a top is in, and we'll see if that materializes. And not that we want Google to go down, but we'd like to get it at a cheaper price, right? I think they're a great company. I think they're a dominant company. And I think you could get it at a cheap price. Same thing here with Microsoft. It had a down week, kind of flagging out up here. We haven't taken out the lows with Microsoft. If we continue to trend down with Microsoft, we're really looking $10 lower. The stock is at $295 right now. I think for you to say this technically, quote unquote, broke trend, you're looking for a break below probably about $285. You break below $285, some of these lower price action could be intact. I would anticipate at some point, I don't know when it is, but I would anticipate at some point these stocks start to channel out again, because many of these stocks like Microsoft, like Google, like Facebook, those three in particular, have just brought forward a ton of gains with the with the rally that they've had. And I would expect, just like we've with Amazon, we've just channeled sideways on this one for like over a year now. I would expect that to happen again with the Microsofts, with the Facebooks, with those stocks that have these monster runs. I would expect them to start to channel sideways at some point. Those can be buying opportunities as well. But I tell you what, these breakouts and these rallies, you could be buying all along this way and let them just continue to grow. It's whatever your risk tolerance is and where you're at with your portfolio. Me, since I'm already overweight these stocks, I'm waiting for them to go in sale. It's like somebody with 100 pairs of shoes. You're not necessarily going to go out and buy a pair of Nikes for full price, but all of a sudden Nike puts a 30% off sale. You don't necessarily need another pair of Nikes, but for 30% off, you'll take another pair. Same thing with all these stocks, at least from my personal position, where I'm at with my investing career. Any type of pullback, any type of sale on the stock, and I certainly would be a buyer. Now, Tesla's in a completely different reality than a lot of these stocks, at least from a technical perspective. I think this one is completely different. We have approached this 750 range. The stock's sitting right at 735. It got above 750, right where we had marked out. Okay, I don't move these lines week to week, and those of you who watch the show understand the power of these technicals, especially when we're talking about well-followed mega cap stocks. With micro cap stocks, very thinly traded stocks, look, technicals might not mean much, but the reason why we go over them every week with these mega cap stocks is they mean a ton, okay? Not necessarily as much as the fundamentals and the news cycle, but they mean a big portion, okay? Because a lot of people trade these stocks, and a ton of people are looking at the exact same charts we are and interpreting them the same way. People can take a news story from Apple, like an injunction on their app store, and make arguments one way or another. There is no way to argue that Tesla is at an area of resistance here at 750, and we're looking for a break above 750 on this one. You break above 750, this uptrend channel that we've in the short term is intact, and I would bet very large sums of money that we'd probably come up here to retest at least $800. So I think you still got another $50 in upside if we continue this trend. Now, if the trend is broken here, we get rejected at 750. It's not that big of a deal, I don't think, until you get below the $675 level. You get below $675, that will have taken out this previous low here. It will signal to technical traders and those types of things, a reversal might have some people go short. You reverse at 675. You could come all the way back down here to $550 per share on Tesla. That would absolutely be a home run, not necessarily a home run, but definitely like a double or a single, hard hit double or a hard hit single in terms of opportunity if you come back to 550 on Tesla. I personally would anticipate this one continuing to move higher. I think we're going to retest 800, maybe even 850, maybe even the all-time highs close to 900 on Tesla. I think by the end of the year, I personally think we will see that. Guys, that wraps it up. Hopefully you guys have a great weekend. I'm off to San Diego. I got a conference and some other business to do down there, but we will be back next week for the FAANG Stock Recap Show. I hope you all have a wonderful week. If you haven't already, follow me on Instagram. Follow me on Twitter. The links are down in the description below. I'll be posting pictures and you can chat with me. You can do whatever you would like there. I'd love to see you on those platforms as well. Until then, have a great weekend. Good luck with your investments.